How you guys doing? I'm so glad that you guys are here. I've got my sheet. If you guys can do my survey for me, tell me if you learned something. Tell me what you want to learn. I want to give you what you need, okay? So today we're going to be talking about taxes, which if you have a business or if you live in America, you should be concerned about this, right? Because taxes are the biggest threat to wealth. Literally, if you do not have a tax strategy and you're just going off of how they've put it together for you, you could pay upwards of 37% of every dollar that you make. So if you think about a $1 bill, $1, every single dollar that you're making, 37 cents of that going to the United States government. And that's just the feds. You still got to pay on Colorado. If you could pass it around, that'd be great. So we're going to talk about how you guys can save money and reduce your taxes, okay? Before we jump into that piece, I want to introduce myself. My name is Ariel Ramsey, and I help people save money on their taxes by understanding how taxes work. So by show of hands, how many people in this room went to high school and took a tax class? You did? Yep. What high school did you go to?
I'm old.
Okay. I want to know still. What high school did you go to? East High School. Okay. Okay. I love to hear it. Well, we need to bring that back into our schools because there's no reason why our youth should be graduating from high school and going into adulthood, whether they're going to college or going straight into the workforce, and they don't know anything about taxes. The one thing that you have to do in addition to die, you have to do your taxes. You should have learned that in high school. So I'm here to teach you. Okay. Like I said, my name is Ariel Ramsey. I am the executive director of Easy Tax Academy. We are a nonprofit organization here in Denver, Colorado. And again, our goal is to make taxes easy and tax education accessible. Okay. I have my bachelor's degree in finance, my master's degree in accountancy. I'm working on becoming a CPA. Taxes are my jam. I live, sleep, eat, breathe tax strategy. And I like to make it fun because sometimes people hear taxes and they start cringing or they're crying or they're getting all dramatic. It doesn't have to be like this. This is an opportunity for us to be strategic with our dollars because we work too hard for our money to give it all away to the government. Okay, so let's get into it. So this was supposed to come in second, but I wanted to ask you guys, what are some of the top 10 mistakes that you think business owners are making? Don't look at the answers. All right. What are business owners doing to make mistakes on their taxes? Do you guys have ideas? You can even shout out some mistakes you're making your dang on self. Let me know.
Not paying the quarterly estimated taxes.
Okay. What else?
Really bookkeeping.
Yes. Somebody give this lady a megaphone, send her through the neighborhood. Who else? Yes, commingling. It gets nasty when you commingle. I can see everything that you're doing when you're mixing your personal and your business. I don't want to know what you do on Saturday and Sunday. That has nothing to do with your business. But if you're commingling as your bookkeeper, I'm going to know about it. And guess who else is going to know about it? The federal government, the state government, if they ever audit you. So that's the biggest nasty thing to do, okay? The other one is claiming too many expenses, right? I have business owners often that will claim every time they go to McDonald's for an Egg McMuffin and a coffee to get their day started. I'm the business owner. I need that to get my day started. That is not a tax deduction. That is a personal expense. Do not write that off on your taxes because if you get audited, they are going to reclassify that as personal and every time that you did it, which that starts to add up, okay? We'll talk more about that. Missing out on valid deductions. That's the opposite, right? There are some deductions that you didn't know that you could take and you overpaid because your tax preparer is doing data entry, not tax strategy, okay? The other thing is not understanding payroll taxes and employer taxes. We're going to get into that today because I need you guys to understand that if nothing else, okay? Misclassifying your contractors as employees or vice versa. We're going to talk about that as well. Filing late or not filing at all, right? That's like sweeping it under the rug. The IRS is not playing around with you. If you decide to go 6 years without filing and then you come back on board, they are going to look at you with a magnifying glass. So we got to talk about that. How do we get on time and get in compliance? The other thing is choosing the wrong legal entity. Most of you guys, I think in this room should be S-Corps, and I'll tell you why, okay? Poor record keeping. I have people every year that come into my office on April 14th with this wheelbarrow full of receipts, and I send them right on out the door because I don't want your receipts. And no bookkeeper or accountant wants your receipts. It's not helpful for us, okay? Those receipts fade away. They turn to just white pieces of paper. So you need a better system to track your expenses. The last one is understating income. That'll land you in jail, okay? So I don't want you guys in there. And I'm not gonna come visit you because I'm gonna say, I told you so. And then the last one is not preparing for the audit. It could come and it could blindside you. They have a 7-year window to audit you, okay? The window for tax evasion is indefinite, meaning if they feel like you were evading taxes, which is illegal, then they can come and get you at any point, okay? And you don't want problems with them. They are the federal government. They have access that you don't, right? So we want to make sure that we're staying in compliance. Okay, so the biggest thing that I like to start with for my small business owners is there's 3 types of taxes that you're probably going to interact with, okay? The first one is income taxes. That's when you do your Form 1040. If you're a small business, single member LLC, it could be your 1120S tax form, your 1120 if you're a C-Corp. It depends on what type of business structure you have. But income taxes are what most of us are referring to when we use the word tax, okay? There's also payroll taxes, and you're paying those even if you have employees or not. We're going to get into that. The last one is sales tax. Here in the state of Colorado, if you sell products, you should be charging sales tax where your product goes. We are a destination tax state, meaning you don't pay where you're at, you pay where your product goes. So it could get tricky, right? If I got an e-commerce store and I'm selling in Arapahoe County, in Adams County, Denver County, I need to be reporting and remitting taxes in all of those counties, okay? And that's the one that'll get you. Your home state, they are actually more aggressive than the federal government because you're in their grounds and they don't take it lightly at all because sales tax is their money. You're a steward of their money. Your job is to collect it and remit it on time every month. So if you're a product-based business and you're not doing that, I want to help you. I want to talk to you and get you right, okay? So we're going to start in talking about income taxes because this is the big piece. We're not going to really cover sales tax in today. We only have an hour. I want to get jiggy, but we can't get that jiggy, okay? So let's jump in. So income taxes. All business income is taxable, okay? I always have small businesses that are heavily cash-based. Well, what about the cash? They don't know about it. It doesn't matter. You should be claiming all of your income. And the reason why is if you ever decide to buy a house and you've been underreporting the cash, when you go to get a mortgage loan, they're going to say, you didn't make any money because you were so busy trying to hide the cash. Report your cash, pay your taxes, be compliant, okay? So we want to make sure we're doing that. If you got any grants, those are also taxable unless you're a nonprofit, okay? So if you're a for-profit and you got COVID relief money, any types of grants, you got to claim that on your taxes, okay? Peer-to-peer payment platforms, Cash App, PayPal, Venmo. If you are using those to collect income from your business, you have to report that. And now the IRS is going to force you to do so. If you've been using any of those platforms this year, 2023, when you do your taxes next year, you're going to get what's called a Form 1099-K that shows every dollar you made over $600, okay? And so it gets really tricky because what about my sweet grandma who sent me $40 to buy crumble cookies for my birthday? That's not business income, right? But it goes back to that commingling issue. You should have a Cash App business account and a Cash App personal one. My sweet little granny should not be sending money to my Easy Tax Lady Cash App, which is for business. She sends it to my personal one. So if you are not set up like that, I recommend that you do because you could get a 1099-K on those crumble cookies that you bought, okay? Even if you didn't get a tax document for it, you need to claim that income, okay? A lot of the times we'll get 1099 NECs, 1099 miscellaneouses, all these different tax documents, and sometimes they don't come. Sometimes they come and they're incorrect. I encourage you to audit your 1099s. If someone gave you a 1099, don't rely on it being correct because you don't know if their bookkeeper accounted for your payments correctly. I've seen it countless times. Someone got a 1099 for 100,000 and they only made 10K. That's way overstating your income. And when you, just like you get that 1099, they send it to the IRS. So if you report the 10, but they reported the 100, automatic audit trigger for both businesses. You want to make sure your records are right. Okay. There's 2 exceptions. Loans are not taxable. So if someone gave you a business loan, you do not pay tax on that. Why? Does anybody know?
It's debt.
It's debt. You got to pay it back. That's not income. It's taxable to, the interest. I heard Benzel say that interest is a tax deduction, but the actual income for the loan, the money in from the loan, you don't need to claim that on your income. Okay. And then the last piece, unpaid invoices. I got a couple right now. People that's 90 days overdue on my invoices. If December 31 comes and those people still have not paid my invoice, I can write it off as uncollectible and now it becomes a deduction. So if you guys are using invoicing and you have outstanding invoices, make sure that you do a true up to ensure that you're not paying taxes or counting that into your income. Okay. Anybody have questions on money in? Okay. And I can send you guys this presentation as well. Okay, cool. I'll do that.
Last thing, money in, so it's just keeping money in.
Yeah.
Not letting it go out, which is the loan, and then like the unpaid invoices.
Yep, because as a small business, right, you guys have all seen your Schedule C. You're going to notice that there's a section that's all related to income. So that's going to be every time money came into the business. Not when you put money in, right, equity, but anytime a customer paid for something, that's all going to be considered income. And you may have several different ways because if you're vending, you might want to make it easy for clients to have that Venmo available, right? But then sometimes you might be invoicing. You need to aggregate all of that to get your total income.
I do have a question about digital products. So if you have a business that like offers digital products,
Yeah.
are they taxable in the same way that like an e-commerce business where you're mailing actual items to them?
That is a really great question. So softwares, right? A lot of us use like Adobe or QuickBooks, things like that. And if you notice when you pay for them and you get your receipt, there is a sales tax there. So even though they're digital products, they are still considered taxable. So taxable to your client on the sales tax side. Like I said, we're not going to get too deep into sales tax, but I have a lot of information on sales tax because it is such a tricky subject and every state is different. So I would love to like dig into that and give you more information on that piece.
So if you have a business all over the United States, you're taxing your clients
Based on
according to where they're located.
if you're located in Colorado, right? So every state is different. Colorado is destination based, so you charge based on where they are, which can get really muddy. It could mean that you have a sales tax account in Iowa because you're paying a client bought items there. So again, we could get into it. They have this thing called Nexus 2, meaning if you hit a special threshold, then you have to pay taxes. So for that situation, if you're shipping all over, I recommend a software called Sales Tax Jar or Tax Jar, I think it is. It's the best. It does it for you. And you can integrate it into your e-commerce platform. Okay, back to our income tax discussion. Let's talk about deductions because this is the area that most of my clients are like, what is a write-off? And for me as an accountant, that's like second nature. I'm like, a write-off, that's something that an expense from your business. Okay, so typically you'll hear it called deductions from your bookkeeper, your accountant, your tax professional. And the informal term is write-offs. The IRS defines a write-off as any expense that is both ordinary and necessary for your business to operate. So that can really, again, get sticky because what my business deems ordinary and necessary is going to be completely different than what yours does. So again, it varies on the nature of the business. And a perfect example of that would be a restaurant. They're going to expense 100 pounds of cheese because they make cheeseburgers. But a construction company, if they expensed 100 pounds of cheese, they're getting audited. What is this? Are you building cheese houses? What is going on here, right? So you want to make sure that you're really thinking about that. Is this ordinary and necessary for my business? I had a client the other day that had a very interesting question. She was like, well, I have a very high-end business, and so it's important that my hair, my nails, my outfit looks good when I'm doing business. Can I expense that off? The IRS says no. Why? Because you can take that same hair, that same nails, that same outfit and go to the club with it. Okay. And so at that point, it's a personal expense. So we're not able to write off feeding ourselves, grooming ourselves. Those are just not tax deductions. That's part of your business, then you got to show up that way. But if you need a special software for your clients to be able to interact with you, tax deduction. Okay. And so what I've done is I put together a list of common expenses that most businesses see. But for most small business owners, again, they're not thinking in terms of categories. You're transacting, right? I'm going to GoDaddy to get my website. I'm going to Facebook ads to do my advertising. I'm going to Vistaprint to get my business cards. And so I really want to encourage you as a business owner to start making an exercise out of when you transact in the moment, just think about, what is this? When I'm at Office Depot, I'm buying paper for my printer. What is this? It's considered an office expense, okay? When I paid my lawyer to draft up that contract for me, what was that? A legal expense, okay? If you can start thinking about the categories that you're spending in, again, I've got kind of a continued list, then you can really start to think about how to categorize your write-offs. There's a couple areas that, again, I like to really talk about. The meals and entertainment, we talked about that one. It is not deductible for yourself. Now, if I have a client that I'm trying to court and I take them to Ocean Prime and we sit down and we have a meal, I can write off 50% of that meal. Okay. And so the whole concept of that is the IRS is again saying your food, not tax deductible, your client's food is. You paid for them to court them into business. So you want to write off their portion, but not your portion. They just give you that clean split down the middle. You don't have to say, well, I had the salmon, he had the lobster. Let's figure out the ratio. It's just a clean split down the middle, okay? The other area that gets really tricky is travel. A lot of us travel for business. Maybe you go to conferences that are in Orlando, or you have clients all over and you just like to do relationship management. A lot of the times on those business trips, though, we still do personal stuff, right? If I'm going to Orlando, I've got to see, what's his name? What's the orca? Name, I forget his name, Shamu. I gotta see Shamu, right? And so if I spent 7 days in Orlando and only 3 of them were on business, but 4 were on personal time, I just need to do that same ratio with my plane ticket and my hotel. So you wanna make sure that you're showing an effort there. The reason why, again, is if you get audited and they show that you took 100% travel, they're gonna say, okay, show me your travel itinerary. Who did you meet with? Where did you go? Versus if you do that ratio, they'll see that you were being mindful that the whole trip was not for business. Some of it was for personal, and they're less likely to say, show me every single trip that you took this year. Okay? Because that's how audits work. Once they find one little area, they're like, all right, show me the rest. I think that you have a problem in this area. Okay? So those are the 2 that I like to talk about. So this piece here, we're switching now. We got out of income taxes. Again, it's really basic. Claim your income, claim your expenses. There's tons of YouTube videos out there about how you can write off your vehicle and different tax credits that are available. I encourage you to dig into those and start to think about how you spend for your business and then do complementary research to confirm if it is an actual tax deduction, okay? But this is the area that I want to spend a lot of time on because this is where most of you guys are getting hit and you don't even know it, okay? Payroll taxes. So payroll taxes are, they're basically our safeguard in a sense, right? Anybody have a family member that's on that's getting Social Security checks or Medicare payments, things like that? Well, when you're young and in the workforce, this huge flag, get on out of here, buddy. I don't need you. Come on now. When you're young and in the workforce, you're contributing to a pot of money that's going to be there for you when you're older, okay? And so whether or not you're working as a self-employed individual or you're working a W-2 job, you're going to pay these taxes, okay? And so typically the way it works is you have your federal income tax if you're an employee. You get to determine that based on how many kids you have, if you're married. You can go exempt if you want. Get out of here, buddy. Come on now. He's just flying around. He's huge.
like
This-
right here. Yeah. It's like, I mean,
I'm about to look. If I have my chanclas, Social Security and Medicare are a set rate. We all pay 6.2% on Social Security, 1.45% on Medicare. Again, our state varies, and you don't pay local on the employee side. On the employer side, okay, so let's again use an example where I employ somebody. These are their taxes. These are my taxes. So I match 6.2% on Social Security. I match 1.45 on Medicare. I contribute to their unemployment and on the federal and on the state level, as well as I pay what's called a head tax, which is each city has that, okay? Now, most of us are single member LLCs. And guess what that means? You have to pay both, okay? So the number here adds up to 7.2%. If you're self-employed, you're paying 15.3% in self-employment taxes. And so that can get really, really tricky because that's in addition to your tax bracket. So I'm going to break out my calculator because I like to do math. And I want to show you guys the numbers because it's so much easier to.
And why so high for?
You got to ask your friend, Uncle Sam. He makes the rules.
The LLC and the corporations are different, or have different tax structures. They basically encourage you to employ people.
Exactly.
So underneath the LLC, you know, it's just.
Yes. So the government wants to. Small businesses, the whole point of running a business is to take some burden off the government. And they reward you for taking the burden off of the government. Okay. And so one of the things that you can do is take the burden of yourself because most small business owners are not thinking about retirement. They're hustling, they're bustling to make it through today, next week, and the rent, right? But they're not thinking about 20 years from now when they can't hustle, when they can't bustle, and the rent still needs to get paid. Okay. And so I'm going to zoom in a little bit so that we can look at these numbers together. Okay. These are two scenarios. One of them is a self-employed individual and one is an S-Corp. Same type of business. They both made $100,000. Okay. They both had $50,000 in write-offs. That's rent, legal, office supplies, all those things that we showed in that list. Okay. The self-employed individual paid nothing in payroll, $0, where the S corporation put themselves on a reasonable salary of $25,000, okay? And so from here, you can see the net income for the self-employed individual is $50,000, while the net income for the S Corp was $25,000. Again, they just were able to deduct the $25,000 that they paid themselves. So in total, this specific business, I have payroll set to zero. Yeah, payroll set to zero here. They're going to pay 15.3% in self-employment tax plus another $6,300 in their income tax because they're in the 22% tax bracket range. So in total, this business owner is going to pay $13,984.50 in taxes. And that's combined of their self-employment tax and their income tax. Whereas the S corporation was able to cut their self-employment tax in half and go to from 76 to 38. And then they also were able to drop a whole tax bracket. Because the tax brackets go like this: 10, 12, 22. There's a huge jump there. And most of us are sitting in the 22, but if we ran this strategy, we could put ourselves in the 12% tax bracket range. So this person paid half the taxes that that person did. Same money, they kept half of it. Okay, so again, I recommend this strategy for business owners that have at least $50,000 in net income. So if you're there, you should be doing this. While it does complicate your tax filing a little bit more, if you have a good tax professional, it should be easy breezy. And for me, I like to save money. I don't know about you guys, but I would prefer to take that money and put it toward my retirement, put it toward my children, put it toward my investments, and not give it to Uncle Sam. Okay?
What's the drawback of this? Because is that $25,000 that you payrolled yourself? You grossed $100,000. $50,000 of it was profit. But you only on paper paid yourself $25,000. Like, are you not allowed to spend the rest of that $25,000?
No, that $25,000 goes into your personal bank account. You can buy a car with that.
Because actually, the other $25,000.
The other 25,000 is your net profit from your business. Oh, I'm messing with my mic. That's your net profit. So it should stay in the business ideally, right? Because that's the business's money. It's used to expend, or it's used to scale the business. But that extra 25,000 is your net income, same way as this is the net income from the business. So they kept more net income, but they also paid more taxes.
Okay, thank you.
You're welcome. What's your question?
That strategy on the S-Corp side, it has a name for it. I always forget the name. It's like, it starts with a D or a B. I can't remember.
I don't
Do you know
know.
what I'm talking about?
I don't know. I just call it the S-Corp strategy.
I took some notes up because it stood out to me from like a class that I took or a workshop or something. And I was like, oh, that's important. But I can't find the note.
Okay. There might be somebody that they like named it after. But again, the whole idea is that the government recognizes that you're probably hustling and bustling in your small business and you're not paying self-employment tax. So guess what happens when you turn 65 and you go to collect Social Security? There's none there for you because you didn't put any in the pot. So they want you to put some in the pot, okay? And so, my screen went away. Yes, that's exactly how you do it. So let's talk about that. Yes, let's get into it.
From the business side of it, though, like in S-Corp is more complex.
It is, but not that much more complex.
Not much more. You just have to keep good records.
You do,
Right?
yeah.
So like your annual meeting, all of that kind of stuff has to be reported, whereas an LLC doesn't.
Exactly. And again, you can have up to 100 shareholders with the S-Corp. It's simply an election with the IRS. So it doesn't change anything that you got going on with the state. It's an election that you do with the federal government to say, hey, I'm an LLC, but for tax purposes, run me this strategy versus hit me with that one, right? Yep, it's just a designation with the IRS.
Regular tax people, they're just like putting in those numbers in those little software things.
Yeah.
Stuff like that.
Well, it does change that filing because now instead of having to do one tax return, Form 1040, with the Schedule C, which most of us are doing if you're a single member LLC, you have two tax returns to do. You're going to do the business tax return, which is called an 1120S, okay? And then the business tax, the net income flows through to you. So what happens is you get a form called a K-1. It's very similar to a 1099. It's going to show this $25,000 coming to you, the individual. And then you claim that on your personal taxes. The beauty of this, again, also, you can up this salary. I just gave a small one, reasonable, right? You could up this if you want. But again, you always want to make sure that you're comparing it to what if I ran this as a self-employed? The savings are always going to be there. You can increase this. It changes your home buying experience as well. Because if you go in to buy a house as a self-employed individual, they're going to ask for your 1040. They're going to ask for your Schedule C. Your kids' social securities might be on there. I don't like giving people all that information. I want my business stuff to be business and my personal stuff to be personal. So in that case, what I do is I just present them the W-2 that my company issued to me that has my salary. And then it's no different than the same person who works for IBM or Apple that's coming into the home buyer.
How do we pay ourselves, or how do you get a payroll?
Exactly.
Income or whatever?
That's a great question. So you could do it the formal route where you actually go through Gusto, ADP, one of those companies. It's so expensive, right? Or you can just literally do the calculation, which you could go to paycheckcity.com. Any of these paycheck calculators, pay stub generators, those were created to help people calculate their payroll. Take your checkbook out and write yourself a check, okay? You still need to send them their money because that 15.3% is their money. So there's a tax return that you do have to file. It's called a 941. Those are done quarterly. So again, it does complicate your tax filings, but every good tax professional knows this strategy, okay? And so we only have enough time to scratch the surface. I want you guys to dig into this because again, if you like saving money, I'm Mr. Krabs when it comes to my money. I don't play around. I like my coins and I don't want to have to give money where it's unnecessary, okay? So do your research, YouTube University, type into there, S-Corp strategy, my favorite YouTube channel. I'm trying to build up my own, so definitely check me out. Okay? follow me on YouTube, subscribe and like for more content. But there's some other channels that are really, again, I'm still in that developing stage. There's a channel called Accounting Life, LYFE, and they're like Black owned and they're so good, man. I'm like, I want to be like you when I grow up. They just are producing great content. So, I was like, thought my time was up.
Was that, we on the same time then.
Is it? Is my time up?
No, this is my time.
Okay, no. I got 30 minutes.
I do have a question.
Ask away.
Just about I know we're not going in deep tax expert either,
Mhm.
is that I don't know if it's a hard rule, like a legality that you have to be making, again, 50,000, because I want to emphasize. So can you make anything?
Yeah, you can make anything.
So,
Again,
S-Corp. And so what would you recommend?
I recommend 50 as the threshold, just because, again, it starts to, your tax filing gets a little bit more complicated. Now you have to do a couple more extra tax returns. And again, you need room to be able to pay yourself a salary. But even if you paid yourself a $10,000 salary, right? It's better than it's better than paying it on 50. Paying 15.3 on 10 is better than paying 15.3 on 50, okay? So it's not, there's no science. The IRS says you have to pay yourself a reasonable salary, okay? And so if they determine, and there's always those like gray areas that they keep so that if they want you, they could get you. And so from my experience and from my expertise, I just recommend hit the $50,000 net mark. You don't have to make 100, but you need to at least be keeping 50 to run this play. Okay. And so if you're not there quite yet, keep going. You're going to get there. But if you are there, you need to start thinking about saving money. Okay. Other questions?
Grants too. So if everybody, again, right, if you're up in 50,000 grants, however your income is coming in.
It's however you're getting it. If you're a for-profit and you're crossing that $50,000 range, you should be running this play. Okay.
So if you've just been running along, kind of doing self-employed for a while about your 1099, you just have to change your filing with the federal government.
Yep.
You don't have to do anything you said at the state level.
Nothing at the state level. So with the federal government, what you do, I'm going to just open up my browser because I like to show you guys the forms because people, and I'm not hating on anybody's business, but you know how it is. Sometimes you go to a tax accountant and it's a 2-page form and they're like, that'll be $2,000. And you're like, well, I'll just wait because that's not in the budget, right? And so I want to show you guys how to fill out this form because it's so dang on easy. And it's ridiculous how much people are charging. So I'm going to put a little extra money back in your pocket. I want to get to the election. It's called the 52. My brain is lapsing on the actual number. Let me just Google it. Tax, S-Corp, tax election. Okay. This is the MacBook Pro. I don't know. I'm new to the Mac world, so I wrote that one off, but I bought it refurbished because I don't play about my coins. I'm not dropping no 14. I spent $6 and got the same machine and it works real well.
I'm like, that's why I'm over here.
Okay, so this is the form that you file with the IRS in order to become an S-Corp, okay? Again, do your research first because once you become an S-Corp, and if you don't like it, which you shouldn't not like saving money. It's a process to change it back. But the first part is really easy. Who are you? Name, EIN number, address, the date that you incorporated, meaning when did you become an LLC, okay? The state that you incorporated in, okay? And then from here, you're gonna tell it what is your, you gotta tell it when you want the election to begin. So I always recommend making it start in the year that you want to start saving money. I want to start saving money now. So put in here, January 1, 2023, okay? Most of us are running on a calendar year. If you're running on a fiscal year, you know that. So select calendar year here. Most of us are single member LLCs. If you have more than 100 shareholders, you're awesome and I love you because you're really spreading the wealth. You're spreading equity, and that's the kind of thing I like. But if you're just a single member LLC, you're awesome as well. You don't need to check anything here, okay? You're gonna put your name and your title. My name is Ariel Ramsey, and my title is president, or I could put CEO, whatever you call yourself in business. Then you're gonna put your telephone number here. This form was due on March 15th, 2023. So you are officially late in filing it. I have filed these late all of my life and I've never had any issue. You just got to know what to tell them, okay? So in this section here, it's saying, hey, you're filing it late. Why? And what I like to say in this section is, I did not have sufficient information to make the decision on time. It means I was thinking about it. I didn't even know it existed. I just found out about it. But if you're filing it after March 15th, you need to fill out this part, and that's enough to say.
I'm sorry, it was due March 15th for you to claim an S-Corp on this coming year's taxes?
Yep, you were supposed to elect by March 15th, okay? But again, I've never had an S-Corp rejected late. I just always run that play. I did not have sufficient information to make the decision on a timely manner, okay? So then you want to sign it, title again, date it, bow, right? Next page. You want to make sure that you put your name and your EIN number, because if this page gets separated from this page, which the IRS sometimes they be having trouble with keeping the pages together, you want to make sure that they know this, okay? The only other thing that you need to do here is, again, put your name. You're going to sign here. This is saying under the perjuries, the penalties, sign it, date it. Put 100 if you're a single member LLC. If you own 41%, put whatever your percentage is, you want to put it there. You want to put the date that you got that. So when you started the business and you were 100%, put that right here. Put your social security number there, and then put the 12/31, because that's the day that your tax year ends. Yep.
I am in the middle of a nonprofit conversion.
Okay.
And I want to know how that will affect my, because I realized having a Rego file, will my EIN number change?
Rego file, what do you mean?
So from LLC, because I'm filed as an LLC through the IRS right now, I have to file as a nonprofit after I do the 1023.
Okay.
Will the EIN change?
Your EIN number will stay the same. You don't want to do a S-Corp because a nonprofit, it doesn't pay income tax.
Right, okay.
So this isn't even applicable in that strategy, but let's talk some more because I can help you with that piece as well. The next page, you do not, so there's nothing else to fill out here unless you have multiple shareholders. Okay, it gives you space for like 6 of them, but unless you have more than that, don't do that. Okay, just do yourself. Here, you still want to write your name and your EIN number, but most of us are not operating on a fiscal year, so this is non-applicable. And then this one as well is usually non-applicable. And so you want to include all of the pages, but again, you're only going to be filling out the first 2. And then the very first page is just where do you mail it? So if you're in Colorado, you want to mail it to this address here, okay? So it's very, very simple. Don't let nobody charge you $2,000 to do that. It takes 10 minutes and you're saving $6,000. And most tax forms are like that. You just have to read them, okay? Did you guys have more questions?
I have one more question about this conversion.
Yes, go ahead.
So like if you're doing it late, so yeah, I'm an LLC, single member, been paying myself, and is it possible, like, do I need to do some moving of money to claim this for this year late? Like, do I have to go and retroactively write myself checks for all the income that I made this year?
That's a great question. So my answer is there's still time, right? There's still time. And there's a lot of different ways that we can work this. I've had business owners write themselves a check for $25,000 from the business, but they did not cash that check on the personal side. So then again, the business still paid it. Just like if you had a regular employee, right? You run a restaurant and your employee washes dishes, you could write them a check and they might not cash that check this year, right? You have no control over that. So that's one of the ways that business owners will sometimes run this play, is that they'll write themselves checks for their payroll, but they know they can't cash that check. I can't bring this check to the bank, right? So you can, but you might have bigger problems. So again, you can still take the deduction in a sense without actually taking that expense on the business. You don't want to never cash it, but you want to recognize there's a way to account for the fact that the business has paid you, but you weren't able to cash those checks. That happens all the time. And I bet a lot of us aren't calculating that, right? If I was working a W-2 job at somebody else's office, I would have a salary. And in my own business, I don't even have that. I should still be accounting for it on the books that you owe me something. I've been putting in equity. I've been putting in blood. I've been putting in time, tears, all of this to this business. Make sure that that's accounted for on your profit and loss. Whether or not you can cash those checks yet or not is a whole nother thing. But make sure that you're accounting for your time and you're deducting the expense of you working in your business. Okay, so we can dig into that more. Again, there are some things when you do it late that you have to consider. And so I'd love to talk to you guys one-on-one about those different things, because again, whenever we talk strategy, you got to understand the big picture and then understand how it fits into your specific situation, right? Because if you can't apply it, it's just a cool play, right? I need you guys to be able to run it and feel good about what you're running, right? Because I tell my clients this all the time. If I don't pass the bus test, I walk outside of here and a DSST school bus knocks me up to the next dimension, you're still responsible for your taxes, for your tax filings, all of that. So you need to understand it. Okay. All right. I love this stuff. Can you guys tell? This is my jam. I love taxes. I am. So if S-Corp is sounding cool, but you're just a little hesitant, another option that you can do to reduce your payroll taxes is pay your estimated tax payments. And I'm sure everybody in this room has heard of those before. They really are simple. It's just a way for you to help avoid penalties and underpayment penalties, late filing penalties. The way that you structure your estimated tax payments is you just take last year's tax return, right? Whatever you paid, split that up into 4 equal payments, and you pay it once a quarter. So you let the quarter in. Quarter 1 is January through March. April 15th, give them a little bit of 1/4 of that money. Then you want, again, quarter 2 from March or April to June, you want to pay in July, give them 1/4. This is something that they love. They love it when you pay estimated tax payments because, again, they're believing that you're not going to pay at all. And so when you start paying them quarterly, you start getting favor, okay? And because there's times where we have to ask the IRS, say, can you knock those penalties off? They pull up your record. This is a person that's doing what they're supposed to do. The answer is yes, okay? And so, again, this is a strategy and it's very simple. Just take what you paid last year, divide it up into 4 pieces, pay it quarterly. All right. I want to show you guys a tax return because we got a little bit more time. Let me get up in my bag. Hold on. Because I bet you guys have never had to read a return before. Have you? Okay. If anybody in here can read a tax return, I'm impressed with you. Okay. I'm going to show you guys this tax return just to show you how this guy could have saved himself some money. And he didn't even know it. Okay. So I redacted out his personal information because, again, tax returns have personal information. This is a person that's running the self-employed play, not the S-Corp play. So most of you guys have seen this before, Form 1040. We do it every year. You even have to do it the year that you die. Ask me about that later. Okay, so but while you're alive, you want to do it each year. This first part is just your personal information. They have this newer question in here. Did you sell any digital assets, NFTs, cryptocurrency? Yep, they tax that. So if you sold it, you have to press yes here. In this section, they talk about dependents. You can see he's got 2 daughters. And so this guy actually had an interesting situation. So he was working a W-2 job. So anytime you have a number here in box 1, that means that he was working a W-2 job. It could be his own business, or it could be an outside business. In this case, he was working an outside business, okay? And so that was really the only type of income that he had up here. But then down here on line 8, you can see there's other income of $14,000. I always like to know what is that. So the tax return says, go to Schedule 1, line 10. So let's go to Schedule 1, line 10. Scrolling. Sorry, I'm trying to find Schedule 1. I think I passed it. Where is it? Oh, there it is. Okay, cool. So you can see here, Schedule 1, he had two different types of income. His business had net income of $65.51, and then here he got other income. This was a grant from the city of Denver, again, taxable. So his business income plus the grant put his other income at $14,000. But I'm interested to know, if he netted this, what did he gross? So I'm going to go to the Schedule C to take a look at his business. So this specific business owner, he sells those little things that go on Crocs. They're called like giblets. Yeah, gibbets. And he made $20,000 selling little buttons for shoes. This is just kind of asking some information. We put it under a payroll. They want to know the NACIS code. Of course, that's always going to be on there. $20,000 is what he paid. He ended up buying the gibbets for about $4,000. So he's marking them gibbets up, right? They're expensive. They're like $10 per gibbet, and a shoe can have like 10 gibbets on it. So I'm probably mispronouncing it, but you feel me. So he had some expenses. He had to use his car a little bit. He had to rent some equipment. He had a little bit of travel because he sells the gibbets at trade shows. And then he had some utilities. I think it was like his phone that we put under utilities. So in total, he had about $9,000, about $10,000 of expenses. And so he was able to take that 20 and get it down to 65 just through his deductions. Okay. So let's go back to the 1040 so I can show you where it gets really interesting. If you guys want to get really into something, we could pull up Donald Trump's tax return. We could really get jiggy. I'm just joking. I'm kidding, guys. I want to keep it simple. That gets way too complicated. Okay, so we took the money from the job, the money from the business, the money from the grant. His total income then was this $22,000, okay? This here is what they call, it's a deduction for the portion of the self-employment tax. So they tax you, and then they allow you to take a small portion of it and deduct it, okay? And then from there, we have his adjusted gross income at $22,448. Because he's a single dad, he gets the head of household standard deduction, okay? And then he also has a qualified business income deduction. So in total, we were able to reduce that $20,000 down to $2,438. Again, we took the 22, subtracted 19, subtracted 6, and then that's how we were able to get the $2,438. So that's the only thing that he had to pay taxes on. He's in the 10% tax bracket range. So 10% of this number tells us how much he should have paid. He only owed $244, but his self-employment tax bumped that up to $925. So had he run the S-Corp strategy, he would have only had an income tax of $244, 10% tax bracket range. He ended up having to pay $925. Again, you can see that if it was more income, this would be a little bit higher. But I like using this example because, again, he could have saved himself a lot of money, but he didn't even realize it because he still got a refund. So the refund was comprised of how much he paid in with his Form W-2, whatever you put in, they give it back. And then he had kids, so they gave him the earned income tax credit as well as a child tax credit. His refund was supposed to be $7,100. He ended up taking home $6,460 because, again, that $925. So his refund could have been bigger in this situation had he paid himself. And that's what I want you guys to understand, that sometimes that self-employment tax, you're not even really feeling it because your refund, you think you did something good because you got a refund and you're self-employed, but your refund could have been bigger. So my homework to all of you guys is pull your 2022 tax return, and I want you to look at this line here, number 23, and see how you feel. I want you to tell me how you feel about that one, okay? All that being said, he still fared very well, right? He was able to take $20,000, turn it into 65 and still walk away with 64. He did great. But had he not had those daughters, it'd have been a different story. Okay. Yeah, you need kids. But I always tell my clients, I have young kids come in all the time and they're like, so should I have babies for tax purposes? And I tell them, no. Ask away.
So I'm not gonna have kids, but there are people who depend on me for their money. You know, there are family members who, like, what does it take to claim someone as a dependent?
Ooh, that is a great question. So Claiming someone who is not your child as a dependent, right? We all had that one boyfriend. He did not want to leave. He was staying, he was eating, he was doing all that stuff, right? Can I claim him as a dependent on my taxes? Okay. So the rule is that you have to provide over half of their support, and they cannot have their own income of over 4,500, I think it is now. So if they're making money, they got to file their own taxes, and you can't count them as a dependent. Okay. You could 1099 them though. I'm just joking. Don't 1099 that guy. Don't do it. I've had people ask that as well, right? Unfortunately, that's not a deduction because, again, the institution that's housing them is paying for their food, paying for their, their room and board or whatever you call it. And you may be contributing to their well-being, but not to their actual living expenses. Yeah.
Okay, so I probably should have stayed upstairs. However, my minion just started working this past year.
Yes.
So she's gonna have her first set of taxes.
Yes.
She's still a whole dependent. She's making a whole lot of money. So what does that look like for my life?
Yeah, that's a great question. So what about when our kids start to say, I want my own McDonald's money, right? You ain't got no McDonald's money, but I got DoorDash money. They start feeling themselves when they start working, right? So in this section, you would make sure that the tax professional that files their taxes marks that someone can claim them as a dependent. You still claim them as a dependent, even when they're in college, you can claim them as a dependent, okay? As long as you're taking care of them, providing a roof and food and all that stuff, you claim them as a dependent because it plays into your standard deduction calculation. And what happens is when they file their taxes, they don't get that standard deduction, but they still get whatever they put into the pot back. So it's a good exercise. If you have teenagers that are working, have them file their taxes. Don't have concern about, oh, well, if you file, I can't get them credits. Let them file their taxes. Just make sure the tax professional marks that they can be claimed as a dependent.
One more.
Ask away, girl. I got time today.
Last year, I this was a COVID think about it.
Mm-hmm.
Okay, I'm gonna go ahead and start a business.
Okay.
Didn't make any money. I made a few little dollars, but I didn't file anything because I didn't make much of anything.
Okay.
So I still.
How did you survive? How'd you survive?
The whole W-2.
Okay, so you probably could have increased your refund because, again, this number here, if it's negative, right, we're adding this plus this, but if this is negative, then we're adding this, subtracting this. It helps this go down, which makes our refund go up.
Can you amend it?
I can amend it for you. Yeah, you could go back and get that money. You had 3 years to make amendments to taxes. So if you need to go back because there's errors, you can always claim, you can actually amend 7 years back, but 3 of those you can claim refunds. So I highly recommend doing it. Deadline wise, right? I'm cray-cray right now. October 15th is the extension deadline. I'd love to help people, but I'm focusing on getting my extensions done right now. So I want to take on new clients. The other challenge that we have is that the IRS shuts down e-file starting in November, and they stay closed till January of next year. So if you're wanting to do amendments, let's just wait till January of next year. If you haven't filed, you need to get in before October 15th, if at the latest before November, because that's, again, when they shut down e-file, and you'll have to paper file. Paper filings are taking 32 weeks to process. E-files are taking 3 weeks to process. So.
If you do a paper file that's an amendment, though, is that gonna mess up your new year?
No, it won't. It's just gonna be really, really slow. You don't hold your breath on that refund.
How do you add your child to your business tax or to your business?
That is a great question. Hold on, let me look at how much time we have. I got 7 minutes. So. Let me pull up the tax code because, again, I want you guys to start this exercise because many of you guys have questions about taxes and you don't know how to get answers on those questions, okay? So when you hire your children or your parents, okay? Your children or your parents, okay? Children or your parents, put them on payroll, you do not have to pay Social Security and Medicare taxes. Now, the children have to be 18. So they have to be young adults. You can't put the little kids on there and get this. They can't be minors, basically. Let me pull it up.
Social Security and Medicaid?
Social Security and Medicaid. So the payroll taxes. Oh, I can't spell today. Hire children and adults. I'm trying to find I like to, whenever I do this, I like to.
So that could be part of the payroll taxes going out as well, if you put your kids on those.
Exactly. So remember, when you hire somebody, they pay their own Social Security and Medicare taxes, 7.2%, then you match it. But if they're your kids or your parents, you do not have to pay that. So again, children employed by their parents. This is straight from irs.gov. Payments for services of a child are subject to income tax withholding. So they have to pay income taxes. But the payroll taxes, Social Security and Medicare, they are not subject to. Children under the age of 18 are not subject to. If the child is 18 or older, then they are. Sorry, I mixed it up. So if they're under 18, if they're minors, then they don't pay the Social Security and Medicare. If they're over 18, then they do. Okay, so these are for, I mixed up the age thing there. And again, I recommend you guys always pull up the tax code. irs.gov is such a searchable website, and they've really worked hard to make it so that the average human being can pull the tax code up and read it. It doesn't feel convoluted. It doesn't feel hard to understand. I have way too much stuff in my mind to remember. The tax code could wrap around this room 10 times. And so I always just like to pull the original source and make sure that I understand how it works, okay? And so I recommend that you do so as well.
I mean, this one, until they're 18, it can be $12,000 that you can.
12,500.
Yep, 12,500. It's probably gonna go up because it goes up, as inflation goes up, right? It's the same thing with the standard deduction. So that was 2022. 2023, it'll probably go up. Another really interesting tax credit that I want you guys to look into, because I want you to be more than a single member LLC. It's a great start, but again, as community builders, as people who care about our communities, it is our task to employ, okay? And employ with good salaries, which means your business has to be making money to make that step. When you get there, share the wealth, employ people, stay the visionary, put people in position to do the work, okay? Contract workers is a whole lane. I want to talk about employees. That's still employing people, right? But if you can put them on payroll, another tax credit that's available to you is called the Work Opportunity Tax Credit. And this is one of my favorites to talk about with small business owners because, again, we want as many tax breaks as we can. So if you hire any individual from these targeted groups, a veteran, an ex-felon, someone that's on TANF, someone that's on Social Security, someone that's on SNAP, that's food stamps, right? You can get a tax credit of up to $10,000 per individual that you hire. If you're a nonprofit, so that's on income tax. If you're a nonprofit, that goes to Social Security and Medicare taxes. So these are ways that you can help people, right? By putting them into positions. The ex-felon category is really interesting as well, because if you hire from this area, you get a bond, meaning if something happens, if they were a bank robber and they decide to run the bank robbery on you and your business, you're insured for hiring that person. I'm being silly, but you guys feel me.
When you say hire, it's as a W-2?
As a W-2, you have to put them as... It's all right. It's insured. For nonprofits, because nonprofits don't pay income tax, this is an income tax deduction for them. It applies to their payroll taxes. But for for-profits, if you hire any of these individuals, it comes off of your income tax. And they have state programs. So it's federal income tax deduction and state income tax deduction. So my very first year of hiring employees, everybody was on SNAP. And I had that on my job application. It was an optional question, but if you are, I'm looking at you like, give me the money, come work for me, right? And then again, you're doing a favor to them because, again, the government is saying, take these people off my back, put them on your back, help them out. They're part of your community. Get them off of SNAP. Give them a salary that they can graduate from welfare, okay? And so even the summer youth employee, right? You can do that as well. So you don't have to, if you're not want to hire ex-felons in your business, you don't have to, but there's a lot of different areas in which you can utilize this.
How long am I gonna work until you qualify?
That's a good question. So I believe it is, let's see if it tells us. Because again, they're always changing. I think that we have to have them employed for like 3 or 4 months. I can confirm for sure. But again, you don't want to hire just to have a bunch of turnover, right? And so again, they're hoping that you utilize it. There are some stipulations though on that piece. And I do believe that it varies from state to state. Let me just try to pull it. Oh, my time is up, so I want to be mindful of the next presenter. But if you're interested in this, let's dig into it. Because again, I like to kind of produce them from a high level, and then we can talk your business, the specific candidate that you're thinking about hiring, okay? Did you guys like this presentation?
Yes.
Okay, I have one favor to ask. If you like this presentation, scan the QR code on there. Let them know that you liked it. Also, let me know what tax topics you're interested in, because I really want to cater these things to be helpful.
How do people get in line?
Yes. So there's 2 ways to kind of get in line, right? I told you we have our nonprofit organization, Easy Tax Academy, which again, the whole goal is to help spread tax education and to make that, to make taxes simple and to make tax education accessible. So the best way that you can contact us is just to text small biz to 305-4363, or you can shoot me an email at info@easytaxacademy.org. We have a program right now where we are working with Mile High United Way, and we're helping small businesses do their taxes and their bookkeeping free of cost. So if you are interested in having your taxes done by me, I'm prioritizing people that are in that program. Because again, we have the funding for it. If you have to be located in the city of Denver to qualify for that, your business does. So you could get yep. You can move your address to Denver. Don't get a PO box. Get a co-working office. Move your address to Denver. Get in my program. Just shoot me an email and I'll get you onboarded into this program. Yep, it's a year-long program. We pay for your QuickBooks Online subscription. We meet with you weekly to do your bookkeeping. We run tax strategy. We talk about cash flow. We get into the nitty-gritty, okay? So if you're interested in that, holler at me. I'm here for it. You can Google me, follow me on YouTube. Like I said, like and subscribe for more content. My YouTube channel is just Ariel Ramsey. But I'm really excited that you guys were so interested in this, because sometimes I start talking about taxes and people start sleeping and I get real offended. So I love that you guys are like bright-eyed and bushy-tailed, okay? Thank you guys so much. I really appreciate your time.